Nigeria has embarked on a historic overhaul of its tax system, consolidating several decades-old laws into a unified framework. Signed by President Bola Ahmed Tinubu on June 26, 2025, the tax reform package is designed to simplify compliance, reduce the burden on low-income earners, and modernize revenue collection. While two administrative laws took effect immediately upon signing in 2025, the core tax changes for businesses and individuals are scheduled to commence on January 1, 2026. 1. The four pillars of the reform. The reform is composed of four distinct acts. Nigeria Tax Act. NTA consolidates and replaces major laws like the Companies Income Tax Act, Personal Income Tax Act, VAT Act, and Stamp Duties Act. Nigeria Tax Administration Act provides a unified framework for how taxes are assessed and collected. Nigeria Revenue Service Establishment Act replaces the FERS with the Nigeria Revenue Service, NRS, granting it broader powers over both tax and non-tax revenues. Joint Revenue Board Establishment Act harmonizes tax administration across federal, state, and local levels and establishes a tax ombuds office for dispute resolution. 2. Key changes for individuals. The new law shifts toward a more progressive system, aiming to protect the bottom 98% of workers. Tax exemptions. Individuals earning 800,000 Nigerian nairas or less per year are now fully exempt from personal income tax PIT. This includes minimum wage earners. Progressive rates. For those earning above the threshold, tax rates range from 0% to 25% for high-income earners, those earning over 50 million Nigerian nairas annually. Mandatory tax ID, a tax identification number, TIN, is now a mandatory requirement for opening or maintaining a bank account in Nigeria. 3. Impact on businesses and SMEs. The reform provides significant relief to small businesses while tightening rules for large corporations and multinationals. Small company definition. Redefined as companies with an annual turnover of 50 million Nigerian nairas or less and fixed assets below 250 million Nigerian nairas. These companies are exempt from corporate income tax, CIT, and value-added tax, VAT. Corporate income tax, CIT, reduction. For large companies, the CIT rate is set to drop from 30% to 27.5% in 2025 and further to 25% from 2026. Development levy replaces multiple earmarked taxes, like the tertiary education tax, with a single 4% levy on assessable profits. Capital gains tax, CGT, increased from 10% to 30% for companies to align with corporate tax rates and reduce tax evasion through asset misclassification. 4. Value-added tax, VAT, and essentials. While the standard VAT rate remains at 7.5%, the structure of how it is applied has changed significantly. Zero-rated essentials, basic food items, education, healthcare, public transport, rent, and renewable energy are now zero-rated. Input VAT recovery. Businesses can now recover VAT paid on services and capital assets, previously limited to goods, which is expected to lower production costs. New distribution formula. Revenue from VAT is now shared more favorably with states. State/FCT, 55%, local government, 35%, and federal government, 10%. 5. Modernization and digital assets. Digital economy. For the first time, the law clearly defines and taxes digital assets, including cryptocurrencies, NFTs, and other virtual tokens. Electronic fiscal system. Mandatory e-invoicing and real-time VAT tracking systems are being introduced to minimize human intervention and fraud. Global standards. The Act introduces top-up tax and Control Foreign Company, CFC, rules to prevent multinational companies from shifting profits to low-tax jurisdictions, aligning Nigeria with Global Minimum Tax Principles, OECD Pillar 2. Summary: what this means for you. Lower tax burden for low-income earners and small businesses. Modern, unified tax code replacing old fragmented laws. Tax residency rules and global income inclusion introduce clarity. Stronger enforcement, digital systems, and penalties to improve compliance. New progressive tax rates. Individuals are taxed on a graduated scale from 0% to 25%. Annual income tax rate. From 0 to 800,000, 0%. From 800,000 and 1 to 3 million 15%, 3 million and 1 to 12 million 18%, 12 million and 1 to 25 million 21%, 25 million and 1 to 50 million 23%, above 50 million 25%.